Will home renovation costs ever become reasonably priced again? And will Americans continue to just dish out whatever they have to pay for home remodels and renovations because they're preferring to stay in place rather than trying to move to new homes? Today, we're going to dig into the home repair market and what it looks like after the pandemic. Hey everyone, it's Dave Meyer. Joining me today is the master of home renovations and construction, James Daynard himself. James, I know that costs in terms of renovation and supplies have really been impacting your business. So hopefully you'll have a lot of good questions for our guests here today.
As boring as building cost materials sounds, it's one of the most exciting things I can talk about. It has such impact on a daily basis. And I'm always addicted to the deal. Find cheaper products. It's a puzzle right now to get your costs down.
Well, I'm glad we brought in you as the co-host today because you're probably the only person on earth who thinks that this is super exciting. But I agree that it's important. Exciting or not, this stuff it really matters because as an investor, you want to understand how to be most cost effective, how to time potential renovations, when and where you want to add value to your properties. And so to help you understand that all, we're bringing on Ryan Dezember. He's a reporter at the Wall Street Journal, and he covers all sorts of things like commodities, oil, natural gas, lumber, and rental houses. And today we're going to talk to him about the stark rise in home remodeling costs from pre-pandemic numbers until now, and what the true drivers of those costs are. And then we're going to discuss some indicators that predict what we may see in the future. We're curious if we're at the tail end of a home repair boom. Are we in the middle? Are we at the bottom? What is going on in this industry and the larger housing market so that we all can make informed investing decisions? So James, if you're ready, let's bring on Ryan. Ryan, welcome to the show. Thanks for joining us today.
Thanks for having me.
For our listeners who aren't super closely following the home repair industry, I am one of those people. Can we just take a step back and have you walk us through what's been going on with just home supplies and repair costs? Maybe let's start with the beginning of the pandemic.
Yeah. So, if you go back to lockdown, if you remember, we were all suddenly at home. Markets were crashing, stocks, commodities, pretty much any asset class was tumbling in the unknown. And, that summer, what started to happen, we noticed that lumber futures started ticking up, really rising pretty sharply. And, if you think back, everyone's stuck at home, everyone's bored, everyone's not going out and spending money on going to baseball games or dinner or movies, vacations. They're looking around their house and they're like, how can we make this house better? We're here. Let's do that project. Let's, clear out the old bedroom and make a home office. Let's build our dream deck. All these things are happening and everybody has the same idea at once. And you may remember lumber futures. They almost became like a meme or a joke. They shot up. So, take me someplace expensive and it shows a couple eating dinner in the lumber aisle at Home Depot. And, everybody sort of remodeled en masse. And what happened is that accelerated a long trend in home improvement and repair spending that we've had in America over the past, couple decades. And it really just juiced it. And to the point where we had lumber futures go to nearly 3 times the pre-pandemic record, just obscenely expensive 2x4s, which are sort of the base commodity for building and repairs. And that really didn't slow down. When the Fed started raising rates to cool down inflation and sort of, just sort of douse all that spending that comes from rising property values and full savings accounts, lumber prices did react. And they were the first thing to sort of fall, one of the first asset classes. But it didn't really change Americans' mentality or desire to remodel their homes and repair their homes. And now we're sort of 2 years in, we're starting to see signs that is slowing down. Lumber prices have fallen. We're starting to see some other things happen that suggest maybe this long boom in home repair and improvement spending is starting to slow down. There's a group at Harvard that studies this, and they put out an index called the leading indicator of remodeling activity. That has started showing the first downturn in annual spending of this sort since like the housing crash of the 2000s, the 2008, 2009 housing crash. So, these businesses that supply building materials are really on high alert for that to happen. We don't know if it'll come true. Every time it predicts a downturn, something happens. The last time it predicted a downturn was heading into 2020. It didn't predict the pandemic and what would happen there. So we've had this tremendous acceleration, and now we're sort of seeing the brakes being put on.
And when you say that it's coming down, is it total remodel costs? Like individuals are spending less money? Is it that less individuals are doing projects, or that material costs are actually coming down?
Yeah, that's a good question. Really, you kind of have to look at it in a couple different segments. You want to paint a room. You want to replace the faucet in your bathroom. Those are small jobs. You go to the hardware store, you get it done. It's under, a few $100s. You do it yourself probably. Those things are going to still continue apace. And if you look at like Home Depot and Lowe's earnings, you'll see that. What's really slowing down is the things that people have to finance, the big projects, the big deck, the big new kitchen, things like that. And one of the big reasons for that is, the higher interest rates have made tapping your home equity line a lot more expensive, right? We have this tremendous buildup of home equity, something like 17 trillion that people are sitting on, but they're kind of prevented from tapping into that with, interest rates that could be, 7 to, into up above 10% for those sort of loans. So that's really put the brakes on a lot of big project spending.
We do a lot of different types of construction. We build new, we do renovation, we do apartment renovation. So there's all different types of construction that we do. And it's been kind of weird. The last 12 months, we see like little peaks and valleys in each different segment too. And where we've noticed the cost of construction, like on new construction, our pricing's actually gone down about 10% year over year for our cost to build, because it spiked up for a minute and we were building, I think, around $300 a foot. And now we're back down to $260, $270 a foot. But the one thing we've seen increases on is the remodel cost. And it's not the building materials, it's the labor.
Right.
The building materials have actually came down quite a bit to where you're paying not too much more than you used to be. Like lumbers came way down, HVAC equipment came way down. But the labor cost on the remodel side is still just exploding right now. I mean, I feel like every month that goes by, they're charging 3 to 5% more.
Really?
And it's just, I think it's more of like a shortage of bodies. Whereas the new construction, they have bigger teams, way more bodies, and they have to keep them working. Because if they don't keep them working, they're in the red.
Right.
And so it's been kind of interesting to track. Have you seen like a difference? Like cost of construction has gone down. That's building materials, but I'm still seeing labor starting to pop up pretty heavy still.
If you parse like the construction spending numbers, like the big picture stuff, what you'll see is like, we're still in the middle of a, all-time factory building boom. Like we're building factories in America like we haven't since, World War II, post World War II, decades. A lot of that's coming from, remember the CHIPS and Science Act and the Inflation Reduction Act. That encouraged a lot of construction of things of like solar panels and things related to the energy transition and computer chips, things like that. But there's also, like a company I cover, Graphic Packaging. They make your paper coffee cups and the boxes your shoes or cereal or like a 12-pack of beer come in. They're building a facility in Texas that, it's going to cost more than $1 billion. It's going to take like 2 years. I went to a factory they built in Kalamazoo. They had like every electrician they could find in the lower 48 working on that project for a while. Like you couldn't get a hotel room in Kalamazoo while that thing was going on, that construction. These big projects will really suck up a lot of that labor, and especially the skilled labor. And so like if you're a construction worker and you can go get on a project like that and get a paycheck for a couple of years, you're not going to be messing around with renovations and like sort of odd jobs. You might turn to that when things go, slower on the high end, but you have all this high end construction really consuming the labor and not really leaving a lot of people to do the small jobs around town. When I grew up working in my parents' hardware store outside of Cleveland. And we would see that, when times were good, you would have contractors coming in. When money was tight, people come in and buy stuff and do stuff on their own. And you could kind of judge the economy based on who was shopping. And you kind of see that on a grand scale with this factory building boom and the infrastructure that's being built.
Yeah, that's kind of how it works in my office. If I'm picking specs, that means we need to save money. I'm like, no. I'm on Amazon. You're picking these specs, and if it's good, I let the brokers and everybody pick whatever specs they want, and it looks shiny, and it costs a little bit more.
Yeah.
So Ryan, I'm curious if you could sort of break down some of the costs and trends for us, because when we're talking about remodel, it's a pretty big generalization. Are there any areas that are seeing a particular slowdown or any other types of renovations that may be remaining more resilient?
Really, the high end is coming down, anything that needs to be financed. And that's interest rates, right? And, you have to figure a lot of people just built their dream deck and their dream kitchen the last few years. So the pandemic and the lockdown sort of sucked that demand forward. We haven't really seen a big slowdown in the small projects, painting a bedroom or building your garden boxes or whatever. Those small things are still happening. And, lumber's way down from what it was. So if you could have waited to do a project, it's going to be a lot cheaper now if you're not paying for labor.
I'm sort of surprised to hear this, Ryan, because I guess I was expecting that renovation trends would at least stay pretty stable right now, given what we're seeing with the housing market. Because with the quote unquote lock-in effect, we've seen transaction volume in the housing market go down by 40, 50%. And so the logic is that with fewer people trading up for new homes, trading down, whatever, that they're going to spend money or just try and improve their current living situation. Is your hypothesis or your research show that that sort of trend has run its course? People have already done that and now people are sort of content, or they've run out of money due to inflation, or what do you think the reason is?
Yeah, well, I think there's a lot of people probably, just like investors with the stock market, waiting for interest rates to come down, right? The market's basically all in on a September rate cut. That's basically priced into everything. That's assumed to be coming. That won't dramatically lower costs for financing these projects, but that's the start of it coming down. Maybe people put things back on the drawing board and start thinking about lining up those projects, right? Now, to your point, you have these people that are locked into homes, and there are companies out there making a bet along the lines of what you said that they're not going to move. They're going to add on. We published a story not too long ago about a company called Trex. They make that composite decking.
Oh, I know it. Yeah, it's awesome. It's very expensive. Yeah, but it's awesome.
It's this amazing product of recycled material, very high-end decks. These are decks that contractors are building. People aren't, messing around with a circular saw out back. This is pretty high-end stuff. And they're betting that demand will not slow on that high end, that they're looking around saying, people are going to stay in place. There's not a lot of homes for them to go to. So they're going to tap their home equity. They're going to build their dream deck with the kitchen and the outdoor living room. And to the point that Trex is spending, something close to $500 million to build a new manufacturing facility in Arkansas to crank out more of this stuff. And you think about it, it makes sense. That's the cheapest way to add square footage to a house, is to do it outside. The other thing that the companies like that have going for them and contractors is that the American home is not getting any younger. On average, the American house is about 40 years old. So they're in need of renovation. They were built to a different era. I don't know how you guys grew up, but when I grew up as a kid, the houses that people lived in were much simpler, smaller, different designs with a lot of separate rooms, hallways. Hallways are a thing of the past now. All these different changes. So you're going to see a lot of houses needing to be renovated, redone, regardless, repaired, major repairs.
Yeah, and on some of the remodeling, in 2022, I think there was almost a record request for HELOCs because people decided, hey, I'm going to stay in my homes and start renovating. And it seemed like we kind of saw this spike in HELOCs getting pulled, especially for owner-occupied, because that was the only ones you could get, 2022, 23. Now these costs of HELOCs have gone up quite a bit, where, now investors are paying sometimes 10 to 12% for their HELOC. And I feel like they're all pulling them, but then they're not using them, which is probably a good thing half the time, where they have them, but then they want the rate to fall before they take on that renovation project.
Right.
And I feel like the building's kind of gone a little bit softer recently. Like we have a lot more contractors reaching out to us on the regular right now, going, hey, do you have more work? Do you have more work? I mean, I had some guy from like 4 years ago. He reached out to me the other day. He's like, hey, I need some work. This is who I am. I'm like, yeah, I remember you. You stole $15,000 from me.
What?
Like 4 years ago. And he's like, I'm like, oh, hi, Sam. How are you? He's like, good. You got any work for me? I'm like, yeah, where's my money? And he's like, oh, but
he scammed so many people. He forgot that he scammed you.
Yeah, totally. And then I sent him back the no soup for you picture. I was like, don't call me again. But we're getting so many more phone calls, even when we post a coming soon sign. Trades are calling us, hey, do you have work? Do you have work? But I do feel like the labor actually could jump again, because I know probably I just know a ton of people waiting to do the renovation. They just don't want to pay 12% for their HELOC. So like, as soon as my HELOC goes back down to 8-9%, I'm doing my renovation.
Right.
And I do remind them, like, you don't understand this is floating half the time, where, even if you pull it at 9, it could go back up. But I feel like there's this actually, like, we hear a lot about tsunamis. There's a tsunami coming, but once those rates fall, people do pull the trigger quick. And I do feel like some of the renovations also slowed down just because the cost of money. Credit cards are expensive now. A lot of people were putting their home renovations on the big box credit cards, and it is double the cost almost on interest. And people are really thinking about it now, going, okay, I don't want to pay this cost. And as soon as those rates come down, I do feel like people are just going to pull the trigger and start really renovating their house again.
That's sort of like the question in the stock market with all the money in money market funds. It's like, how far down does the rate have to come before that levee breaks and all that money comes rushing back to the stock market? Or, what rate is it where people that have been dreaming up their kitchen, but they're waiting for rates to come lower? And like, is it just that one token rate cut that shows that direction, to your point, where, they're counting on over time the rate will come down and the Fed will keep chipping away at it? Is it one rate cut? Do they need to see it go to, a full percent lower? Obviously, it's the Fed funds rate is not what people are paying. So a quarter point reduction in that may be a larger reduction in what people would pay to tap their HELOC. But that's sort of the big guessing game that all these companies and the Home Depots of the world are looking at. It's like, what is that like psychological number where people make that decision and, all right, let's do it.
It's complicated. Yeah. But do you think, I always wonder if the average American consumer really follows the interest rates as much as we do, because we're all paid to do this in some way. And like, I get it that some people are saying, hey, a 25 basis point cut is great. But like, at the end of the day, for the average renovation, is a 25 basis point cut going to really make that big of a difference? Like, especially with inflation going up, like, you might be better off doing it now, even with a rate cut, if supply costs might go up.
Right. I mean, like, using lumber is sort of a very cyclical one. Like, sawmills are shutting down from British Columbia to Florida, right? Like, the price is just they can't keep losing money at today's prices. Well, it's like all commodities are like that. It's just, oil's high. Everyone drills an oil well. There's so much oil, the price falls. Shut them all in. It's this never ending thing. So, if you're not buying lumber now and you're like, oh, it'll keep going lower. Well, at a certain point, enough sawmills will shut down to balance the market and the price is going to shoot back up. So, you're sort of like, you might be waiting for the rate to come down a bit, but then your supplies might turn on the commodity cycle. So
just another example of how impossible it is to time the market. There's just too many complicated factors here that, like, if you want to renovate your house, you should probably just do it.
Another thing that the Trex folks pointed out is that, like, people that are doing really big stuff, especially older folks who are, maybe retired or toward their end of their working life, the higher rates have been great for them. They're making 5% on their savings. Like, that's like, they haven't had that in a decade or two. It's like that could drive demand for things like, fancy appliances and elaborate composite decks and outdoor swimming pools and things like that.
Ryan, I wanted to ask you, you've been talking about Trex, super interesting company. And again, this is sort of a high-end lumber alternative, wood alternative for decking. But you said that they are expanding and they are building out a new manufacturing plant. In my mind, that means more supply of this. Does that mean that there's a chance these types of luxury or sort of high-end materials or any other supplies that real estate investors might be using could come down in the future?
It's possible. I mean, that's sort of the risk that Trex is running. Now, on the flip side, they, like many others, did not see the pandemic, prompting this huge remodeling boom. They almost ran out of product. Like they were sold out. And that's terrible for a company because all of a sudden you're getting replaced on the store shelves. You're getting replaced in blueprints, right? Like you've lost that business. In the South with that Arkansas plant, one thing they're doing is they've got a plant out west in Nevada. They've got their main one in Winchester, Virginia. And they're trying to basically come into the South in the Pine Belt and compete with Southern Yellow Pine. And get people to replace that, So there's sort of that bet's sort of a market share wager, but they're also, they're going out and they're expanding into a situation where most people think that spending is going to go down. They're taking the other side of the bet. They're saying your house is old. You're not going to move because rates are what they are and the supply of housing is short. You're going to improve what you have.
And at one point in Trex, I remember, because I like Trex, but I don't put it in a lot of my projects just because it's expensive. Mm-hmm. We put it in our nicer stuff, and I would opt for Trex over a nicer wood like an iron one or anything like that because it just lasts longer. But there was one point, it's probably like 12 to 15 months ago, where Trex was cheaper than cedar and other decking.
Wow.
We would price out lumber versus Trex almost every time, and I probably installed like 7 or 8 decks during that time where Trex was basically flush.
Wow.
If not a little bit cheaper. And now that was just a moment in time. Because I remember I was like, oh, let's Trex everything. And then especially on our rental properties, we were buying Trex because it was just,
wow,
it lasts a lot longer. I actually like to put it on our rentals because it's way less deferred maintenance. But I'm kind of questioning their bet. Now, I know their Trex, it says their net sales went from 239 to 374, 57% increase. When they're talking about those sales growth, is that from back orders or is those all recent too? Because I felt like people were buying Trex a lot, but now they're looking at ways to get their costs down. And your typical wood deck's going to cost you about 25% cheaper than Trex for materials. And depending on who's installing it, some guys charge a lot more to install Trex, some don't. On their sales, is that usually like built up like pipeline sales that they're delivering on, or is it pretty recent? Because I'm like, I wonder if there's going to be a slowdown on that because there's no way I'd buy Trex today. I'm already over budget on everything else. I can't opt to go up on the deck.
Yeah, I think it's a mix. I mean, because they sell to the big box retailers, right? So there's obviously like a pipeline and an inventory that they're watching there. But then they have this sort of network of contractors that they deal with who, get a lot of stuff straight from them. So I think that ramp up, some of it may just be them catching up with the demand. They probably could have sold a lot more in 2020 through 2022 had they had full production. Now they had their Winchester, Virginia facility went through a major expansion during the lockdown. And the company says, without that, they would have been in like real deep trouble in terms of meeting demand. The overarching sort of bet that they have, though, is that sort of that lock-in effect, that aging home, the aging homeowner, and sort of that argument that like, look, these people, they've made their money. They're on like their second or third deck. They don't want to be going to the hardware store and dragging that, 5-gallon bucket of Thompson's water seal every spring or summer. And so they're sort of betting that people will pay that. Now, the contractors I spoke to for that story, they were like, it's a little harder to sell people on this stuff. We're having to go back and hold people's hands a little bit more and convince them, no, now's the right time. But ultimately, they did fill up for the summer. All the contractors I talked to were booked for the summer. It took them a little bit longer to get booked. It wasn't as crazy, but they did fill up this summer with work. So, you mentioned cedar, and one of the companies that does a lot of specialty wood, Teal Jones, a closely held Canadian company that has a lot of sawmills in the South and some specialty mills up in Canada, they filed for bankruptcy, protection this spring. And that's kind of shocking because you think we just had $1,700 lumber where mills were just printing money.
Right.
So they put the money back in, invested in their business. They've got a mill under construction in Louisiana. Didn't even make it to see it finished. So
Wow.
That's sort of the risk of expanding into a declining market for this stuff.
Awesome, Ryan. Well, thank you for sharing this information. But before we let you get out of here, do you have any predictions, thoughts on where the home renovation industry might be going, particularly any information that's relevant for small to medium-sized real estate investors?
I mean, we just got the housing numbers today, right? And they looked good. But if you separate them and take out multifamily, there was an upturn in multifamily. Single-family housing permit starts are down. That segment, we would expect there to be more houses. There's heavy demand. But, I think if you go through and look at entitlements and land purchases and things, that next wave of home building is going to take a while. People are not going to wait. They're going to be working on their homes. We have really 2 or 3 decades of evidence that this is just a boom industry. If you go back to after the housing crash, there weren't a ton of industries that were doing well. Home improvement and renovation spending was one. And that really helped, the American economy, the stock market. And that's a really powerful force. And I think if we just get a little bit lower borrowing costs, you'll see people start to come back in who have been waiting. So it's hard to bet against, even though there's signs of it slowing down. We might be in the slowdown now.
Yeah.
I think we are. It feels like we are. From a consumer standpoint, it feels like it's slowing down and people need work.
Don't discount the effects of weather. We had a very wet spring in some parts of the country that slowed things down. That can have a big effect on the prices of things, on labor. Like Houston, nothing's getting done right now in Houston, right?
Right. Yeah.
Next month, there's going to be a lot of work going on in Houston. So these things can really warp the data. And so we really need a bigger view, a wider data set to really judge it.
All right, Ryan. Well, thank you so much for joining us. We really appreciate your research and insight. We will link to Ryan's stories about Trex and put all of his contact information in the show notes below. Ryan, thanks again for being here. And thank you all so much for listening. For BiggerPockets, I'm Dave Meyer. He is Mr. James Daynard, and we'll see you for the next episode very soon of On the Market.
On the Market was created by me, Dave Meyer, and Kaylin Bennett. The show is produced by Kaylin Bennett with editing by Exodus Media. Copywriting is by Calico Content, and we want to extend a big thank you to everyone at BiggerPockets for making this show possible.